Hey guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So before we start discussing today's topic, let me request you all to subscribe to my YouTube channel by clicking on the subscribe button here. Once you click on it, you will get the confirmation on the left bottom corner. Post you subscribe to my channel, also make sure to press the bell icon and click on all. You will get the confirmation on the left bottom corner so that whenever I upload a video, you get the notification about the same without any misses. Also, I would request you all to subscribe to my Telegram channel with the name HYIT Intraday Calls because I share a lot of things over there and it might be helpful to you in some way or the other. All right, so before starting today's discussion, a quick reminder. I hope every one of you are staying back home along with your family. It's important to stay back home for reasons that are well known to every one of us. Okay, so having that said, let's jump on to today's topic. So in today's video, I'm gonna make a particular technical much simpler to use. I'm sure every one of you would have heard a lot about volume profile trading, okay, especially the word volume profile. Okay, now this volume profile trading has a couple of components within it, like the POC, that is the point of control, the developing POC, and developing VA. VA stands for value area. Okay, now before we get on to these stuffs, let me draw a line and remind you about the basics. Okay, so the point is, the more you keep the things simple in trading, the more are your chances of getting a winning trade. Okay, and this is the exact thing that we are going to do in this particular video. Okay, we will make volume profile much simpler to use. Okay, now the question that you might want to ask is, can I or can we use this as a strategy, a full-fledged strategy? Well, the initial answer is yes, but let's complete the discussion and then I will answer this question in details. Okay, so first thing first, what is volume profile and what are the components that we should be considering, or I would say, what are the components that we should be using while we are trading? Okay, so basically, volume profile tells you the kind of volume that is being traded at a particular price. Okay, this would be the explanation in the layman's term. Okay, so let's say a script is trading at 500 rupees and it is going up to 501 and then to 502 and then to 503. So volume profile will show you what was the kind of volume that was traded when the script price was 500 rupees, and then when the price went up to 501, it will show what was the kind of volume that was traded when the script price was 501, and so on and so forth. Okay, so I hope this is clear now. Okay, now the second aspect to it is, are the components that make up the volume profile. Okay, so majorly there are three components that make up the volume profile: the POC, the developing POC, and the developing VA. Also, okay, also, as I said earlier, we will make things simpler here. So the only thing out of these three components that we will be using while we trade is the POC, the point of control. We will not be using any other component that is present in the volume profile. Okay, and since we will be using POC only, we should know what that exactly is. Okay, so POC basically is the highest volume node. Okay, as I said, the full form of POC is point of control. Now, in simpler terms, you can consider this point, that is the POC, to be a point where a lot of transactions were done, and the transactions might be on the buying side or the transactions might be on the selling side. Okay, so this was all about POC. You don't have to know anything more about POC. The only thing that you need to know is that POC is a point where the maximum number of transactions are taking place, and those transactions can be on the buying side or they can be on the selling side. Okay, so if you are not able to understand the stuffs, that's fine. Okay, just keep listening. Okay, things will be clearer when we get on to the charts. Okay, so as of now, we have covered what is volume profile, what are the components of volume profile, and out of those components, which are the ones that we should be using and which are the ones that we should not be using while we are trading. Okay, now let's jump on to the charts. Okay, let me bring up the chart here. Okay, so this is a 15 minutes chart of MCX. Okay, MCX is one of the scripts that is being traded in the NSE. Okay, as you can see here, MCX, and the time frame is shown up here, 15 minutes, 15 minutes. Both the charts that you see here are 15 minutes. Okay, on the left hand side, okay, before I explain this, let me explain some more things to you. Now, you have to remember one thing, that the text will work just fine on the scripts that have the highest volume and volatility to trade on an intraday basis. Okay, now the way using which you find those stocks to trade in intraday, I will leave it to you. Also, I have shared many videos that explain the ways to shortlist the stocks for intraday trading. Okay, so you can have a look on them if you have not gone through them. So search around in my previous videos. I'm sure you will get a couple of them. Okay, so it should not be the case that you pick up some random stock and then come back to me saying that, bro, this is not working. Okay, so have a check on that and trade carefully. Okay, now in this example, I have taken MCX because it was in the top losers today, right? It was in the top losers. And as a result, the volume and volatility in this particular script was really good. Okay, so it was one of the candidates which was being traded by me in my intraday trading. Okay, so now coming back to the charts again. So this is the 15 minutes chart in both the windows for MCX. Okay, on the left hand side, you see how exactly the volume profile looks like. Okay, so this is the raw picture of how volume profile will look like when you plot it on the chart. Okay, whereas on the right hand side, the thing that you see, that is the refined one, that is the simpler one. Okay, so we will be following the right hand side one. Okay, now I will just show you. Let me go ahead and take off volume profile from here, and I will, okay, before I proceed any further, let me tell you that the platform that I'm using is TradingView. So anything that you're seeing here will be related to TradingView. So if you are into some other platform, then you have to find the indicators accordingly and stuffs like that. Okay, so those of you who follow TradingView, this is the way you have to plot it, and this is the way you have to amend it. Okay, so this is a naked candlestick chart, 15 minutes chart. We go to indicators, we go to volume profile, and you will see four types of volume profile here. We will use the session volume profile. Okay, now the scope of this video does not allow me to explain all the volume profiles. Maybe I will do it some other time, but trust me, you need to know the stuffs that work in the live market. Okay, you need to know the stuffs that can fetch you with some good money. Okay, so that is how I'm that is how specific I want to be. Okay, so the thing that we will be covering in this video is session volume. Okay, so you have to click on session volume. That gets plotted here. You go to the settings and you click on developing POC and developing VA and click on OK. Okay, so this is how it looks like. Okay, if I maximize this, if I make it a bit bigger, what is the first feeling that you have? I mean, my first feeling is, man, this is screwed up. I mean, I'm not able to understand what is going in the chart. It is not at all clear. Okay, everything is so confusing. Blue lines, red lines, and so many things going on the left hand side. I have some graph kind of thing. This long red line. All these things are very confusing. Okay, now from my perspective, okay, as I said, we will make the things simpler. No offense, but I know this is the disclaimer for the guys who use volume profile. Okay, I'm not saying that volume profile does not work, or you do not need to have all these things on the screen, but here in this video, the scope of this video is to make sure that we simplify volume profile. So I will go ahead and remove some of the aspects of volume profile and make it simpler. Okay, so for the guys who use volume profile, who know how to use volume profile, who are the masters in using volume profile, please do not get offended, because there is always multiple ways of doing a single thing, and that is what exactly I'm showing up here. Okay, so having that said, let me get back to the topic. So if you see this chart in the first glance, your impression will be, oh my God, what is this? I'm not able to understand anything out here. It is so very confusing. Okay, so the thing that you need to do here is go to settings. Okay, there will be two tabs, inputs and style. Okay, in the inputs, okay, let me cover style first. In style, let be volume profile be checked. Okay, show values, let it be unchecked. Get down, and you will see these three components that we talked about in the theoretical portion, right? POC, developing POC, and developing VA, right? You need to uncheck developing POC and developing VA. So the only thing that we have is POC. Okay, color, you can change it according to your preference. In this video, I have kept it as red. Okay, now getting on to the inputs window. Okay, have everything as the same. Okay, no changes for rows layout, no changes for row size, no changes for volume, and no changes for volume area, value area volume. Okay, let it be the same. Okay, the only important thing that you need to change here is extend POC right, which means that if you check this box, the POC of the previous days will be extended till today's date. Okay, now mark what's happening here. Here, okay, let me uncheck it. I unchecked it. Some of the red lines went off from here, right? Now see this area. If I click this, you will see some red lines coming up here. I check this and see here. You saw these two red lines coming up here, right? So what are these two red lines? Why are they coming up in today's chart? These red lines are the POCs of the previous days. Okay. Now the point of control is okay. So these are the changes. I hope that is clear. And then you click on OK. Okay, so now you will be seeing the charts in both the screens to be the same. Okay, this screen and this screen. So we have taken out the stuffs that we don't need. Okay, right now we are having only the stuffs which we need while we trade live. Okay, so getting back to these lines which popped up when we checked that checkbox. Okay, those lines are the POCs of the previous days. Okay, so every day the POC gets created, and every POC will be different for every day. Okay, so for Friday you will have a POC. Okay, so let's take for example today is Wednesday, 1st of April. Okay, so the last red line that you see here is the POC for today. That is for Wednesday. Okay, this red line that you see, that is the POC for yesterday. Okay, that was for Tuesday. Okay, one more red line that you see here, that is the POC for uh, 30th. That is for Monday. Okay, so every day a new POC line comes up for that particular day. Okay, so when we are checking this particular box, extend POC to the right. Okay, so the POC line are not getting confined to that particular day. What it is doing is it is extending the POC lines towards the right. Okay, I hope that is clear. Now, the second question is, why are we extending the POC lines of the previous day onto today's chart? Is it really helpful, or are we really going to use the POC of the previous days in today's trading? The simple and the straight answer is yes. The POC lines of the previous days are very, very important. And the reason is they work as the support and resistance levels. I hope that is clear. Let me repeat it again. The POC lines of the previous day, or the POC lines of the previous days, are very important to be drawn on today's chart, because those POC lines will act as supports and resistances. So by seeing the supports and resistances, you can decide whether to take your position, your short position, your long position, whatever position you want to take, whether you should be taking up that position or not, and if yes, then at what exact point. Hope that is clear now. Okay, so this is how we set up the chart using volume profile. Okay, next is we will get on to the explanation of how do we trade using the POC lines. Okay, one more thing that I missed to say is when the market is live, okay, when the market is live, so what I said was this red POC line that you see here, that is for today, right? 1st of April. So right now you see this red POC line at the bottom of the chart. Okay, but it was not at the bottom of the chart when the market was live. So today's POC line will keep fluctuating depending on the volume. Okay, so more important is to see the POC lines of the previous days rather than today's POC line. Okay, that does not mean that you will not have a look on today's POC line. Today's POC line is also important, but my point is that today's POC line will not be static. It will keep moving up and down depending on the moves of that particular stock. Okay, I will just show you. I will show you so that it is clear. We will take the help of the replay feature in TradingView. Okay, so that things become more clearer. Okay, so just a moment. Let me think if I'm missing anything here. Okay, so we have, yeah, we are good. Okay, so now, as I said, we will take the help of the replay button or the replay feature that you see here on the top to explain stuffs here. Okay, so what does the replay feature does is it will replay the candlestick chart exactly in the way it was happening in the live market. Okay, so you click on replay and we will start from yesterday's chart from the 3 o'clock candle. Okay, okay, so everything on the right hand side is gone. Okay, if you see it carefully, everything that we have on the right hand side is gone. Okay, so we are starting our observation from 3 o'clock candle from yesterday. Okay, so let me start it and you need to have a look here. Okay, have a look here. This is the 3 o'clock candle for yesterday. This is the 3:15 candle for yesterday. I have just paused it. Okay, so this is the 3:15 candle for yesterday. Okay, that is for Tuesday. So the next candle that you see forming will be for today's 9:15 a.m. and that is where I want you to concentrate. Okay, I will keep explaining stuffs so that you get a gist of how to use POC in the live market. Okay, so I'm playing it again. Okay, so this red thing that you see here, red candle that you see here, this one which just got formed is the 9:15 candle for 1st April, that is today's session. Okay, let me play it again. So right now what you see here is the 9:15 candle is on the go and the POC line is here. This red line is the POC line. Okay, so as I said, POC line will keep fluctuating throughout the day. Okay, so for every 15 minutes the POC line will keep forming. It's not that the POC line will form uh, till the end of the day. Okay, as in when the candlesticks form, as in when the volume comes in, or as in when the volume goes out of the movement of the script, the POC line adjusts itself accordingly. Okay, so at 9:15 you see the POC line here. Okay, now I'm playing it again. Just a moment. Okay, I'm playing it again. Okay, so 9:15 candle on the go. Okay, this is the 9:30 candle. Okay, if I put the cursor here, you can see the time at the bottom here, right? Yeah, here. 9:30 candle this is. Okay, so what do you see here? What do you observe? First of all, As instructed, you should always start your trading only after 9:30 if you are into intraday trading, because from 9:15 to 9:30 things are really choppy. You cannot decide anything. Okay, so by 9:30 or by 9:45 things become more clearer, and the market gives a more better picture of whether the market is bearish or bullish, and accordingly we will select the scripts. Okay, so here in the 9:30 candle, what do you see? Okay, let's complete the 9:30 candle. Okay, let me play it again. Okay, so 9:30 candle. Okay, 9:30 candle is this red candle. Okay, so it actually closed below the POC line, and as I said, you have to see both today's POC line as well as the previous day's POC line. Okay, now if I explain it on the charts, what I understand from the chart here is the 9:30 candle, after it closed, it actually closed below today's POC line, which tells me that I can initiate a short position in MCX once the 9:30 candle is over. Okay, so 9:30 candle got over, and this is the candle where I should take the entry. Okay, now if I take the entry in the 9:45 candle, till what can I expect the stock to fall? I'm shorting this, right? I'm shorting this. I'm shorting it because the 9:30 candle closed below the today's POC line. That gives me the confirmation that MCX can fall down further. Okay, so if I am convinced and if I am taking a short position in the 9:45 candle, then what should be my target? Till what point can I expect MCX to be falling down? The answer to this is this previous day's POC line. If MCX falls, then it has all the chances to come till this POC line. And this red POC line is yesterday's POC line. Okay, so when the script price comes till here, this POC line will act as a support. So if it is a strong support, then it will throw back MCX prices to the upward end. And if it is not a strong support, then this support will be breached and MCX can fall further. Now, what happens if this line is breached and a candle closes below this particular POC line? Then our next target becomes this POC line. This POC line is day before yesterday's POC line. Okay, so this is how you analyze the stuff in the live market. Now, I'm not saying that if you take an entry at the 9:45 candle, you stay back in the trade till this POC line is reached. No, the rules for your entries remains the same. Never forget that you are into intraday trading. Okay, so if you are taking an entry at the 9:45 candle, let's say the price where you took the entry is around 1085. Okay, let's say roughly, let's say you made an entry at this point 1085. Okay, and you are anticipating that it can go down till this POC line, and this POC line is sitting at 1067. Now, does that mean that you will wait till 1067 is reached? No. Now, this is a 1,000 rupees script that you are trading. So if you have taken an entry at 1085, come out of the trade once it reaches approximately 1% of the script price. So for a 1,000 rupees script, 1% will be 10 rupees, right? So come out when you are in a 9 to 10 rupees profit. So if your entry was at 1085, come out of the trade when it reaches 1075 or maybe 1074 or maybe 1076, wherever, plus minus you can do it. Okay, so you have to get out at this point is what I'm telling you. Okay, so you in intraday trading, you have to be very careful and you have to always play on the safer side. Okay, it doesn't matter. I mean, you clearly see that this is the support line which is at 1067, but as an intraday trader it will not be a clever move from your end to sit till 1067 is reached. Okay, so I hope you're getting the point. Okay, so let me play this again. So you are taking the entry at the 945 candle. I'm not talking about the stop loss because stop loss is a completely different explanation. Okay, I cannot explain the stop losses here because for using the stop losses, I use only one method, and that method is only known to my trainees. Okay, so stop loss, the discussion about stop loss is out of scope of this video. We are only talking about our entries and exits. I hope that's clear. Okay, so let me play it again. So you made an entry at the 945 candle, and the reason is well known. Okay, I just explained the reason multiple times. Okay, so let me play it again. Okay, so 945 candle is on the go. This is the 10 o'clock candle. Okay, and see, 10 o'clock candle, 10 o'clock candle is this one, 10:15 candle is this one, and it is falling because today's POC line is working as a resistance for them. Okay, so it is falling, falling again, falling again. So at this candle, okay, 1075, our target is met without any struggles. Within half an hour to 45 minutes, our target is met. Okay, so I expect you all to come out at around 1075 or 1074 or 76, whatever it is, 9 to 10 rupees from your entry price, and your entry was at around 1085. Okay, so without any struggle, you are hitting your targets. Okay, now before I play it again, as an intraday trader, to be on the safer side, you booked your profits here. Okay. Now, the next question comes that what if I want to take advantage of the complete move? Because the market at 11 o'clock in the morning, I see that the bears are completely dominating the market. Okay. So chances are that stocks like MCX can fall down throughout the day or can fall down much more points, in the downward direction. So what if I want to take advantage of that particular situation? Well, the answer to this question is you need to wait for the support to be breached. So what is the next support? This red POC line that you see, yesterday's POC line is the support. Okay. Now, if this line is breached and if any of the candlestick closes below this line, then you can initiate another short entry at that candle. Okay. So let me play it again. Okay. It's hanging on there. And this is the candle which actually breached that particular support line. That is yesterday's POC line. Okay. So the guys who want to take the advantage of the complete fall, they should make an entry at the 12 o'clock candle again. You can initiate a short entry again at the 12 o'clock candle. Why? Because the 11:45 candle actually breached the previous support and closed below it. So that gives you the confirmation that it might fall down further. Another confirmation is that the market is bearish. So seeing all these things, you can initiate your second short entry at the 12 o'clock candle. Okay. And by the time you see these candles moving, also make sure that you are seeing today's POC, because today's POC will change in some time. Okay, so have a look on today's POC also. This is today's POC line. Okay, so I'm playing it again. So 12 o'clock candle, this is 12:15 candle, moving down, and in a single 15 minutes candle it actually breached the next support also. Okay, so if you would have taken an entry at the 12 o'clock candle, let's say you took an entry at the low of this candle, the low of this 12 o'clock candle is 1051.60. Let's take it as 1051. let's round it up. So as per the script's price, we aim for 1% of the move. Okay, so if you are initiating a short entry at 1051, then you should target for around 1041 or 1040 or 1042, plus minus whatever points it is. Okay, 10 rupees, 9 to 10 rupees. So your target was met at around here, 1041, at this line itself, right? So uh, yeah, so it was met here at 1041 or 1040. Okay, so again you gained 10 more points, right? So and now if you see, the POC line has moved. Earlier it was here at this point, remember? Earlier it was somewhere at this point. The Okay, let me change the color. People will get confused. Okay, let me keep it light red so that we can differentiate. Okay, so previously the POC line was somewhere here. Now the POC line has moved here. Okay, because what POC actually does is it tells you where exactly the maximum volume was traded. Okay, so in this case, the trade or the transactions that were happening were on the selling side, and the most number of transactions happened at this particular price at around 1058 or 1059. That is why POC came down from this position to this position. Now, what is the use of, I mean, how should I use today's POC line then? The way you should be using it is that, see, the POC fell down from here to here, right? So this becomes a resistance now. Okay, the script will struggle to go above this price. So if you want, okay, if you want to stay back longer in the trade, you can have this as a stop loss. Maybe this is just an example. Okay, I'm not saying that you should have your stop loss here. I'm just stating that if you want to continue with your trade for some more time, then this might act as a stop loss because this is a resistance now. Okay, so that is how you will use today's POC. Okay, one thing is for sure, today's POC is important, and the POC lines from the previous days are also important. You see another POC line here coming from some day. Okay, so this is also important. Okay, because from here to here, okay, it's more unlikely to fall for such a huge extent. But in case it falls, then this POC line will work as a support. Okay, so all the POC lines, it might be for today or it might be for from any of the days from the earlier days, all of them work as very strong supports and resistances. Okay, so our second entry is also done. Let me play it again. And this is the 12:45 candle. This is the 1 o'clock candle, 1 p.m. candle, 1:15 candle. See how is it moving. Okay, just see how is it moving. Okay, so basically today's POC line is working as a very strong resistance here, right? Today's POC line is working as a very strong resistance. It is not able to breach and go up. It is suppressing the up move. Okay, the reason is it is a strong resistance. Okay, so this is how you will use the POC lines. Okay, and let me warn everybody once again, this is a scenario wherein the fall the fall in this particular script happened throughout the day. Okay, but this will not be the case every day. Okay, you cannot take things for granted. Okay, it might be the case that it went till here, and again after maybe in the second half after 12:30 or 1 o'clock in the afternoon, it recovered, the market recovered, because of which MCX also recovered and it went towards the day's high. Or it might be the case that it even crossed the day's high and went above. It might be the case. Okay, very much possible. Okay, so it is important for you to be in control. Okay, once you are in profits, just leave it. Okay, the second entry that we talked about was just for an example. Okay, I if I would have traded this, like I have traded this today, but as a trader, if I talk on that perspective, when I took the entry at the 9:45 candle and when I was easily able to capture 10 to 11 points here, I will stop my trade. I will not care whether MCX fell further or not. My objective is to be in profits every single day. Okay, and second objective of mine is to be in profits or to trade without any tension. Okay, and that is exactly what I did today. Okay, so I captured easy 10 to 11 points for 1,000 rupees crib, and I am in good profits. So why should I care whether MCX fell down further or not? Okay, so have a check on that point. Okay, don't be greedy. Okay, whatever I have explained here is for the illustration purposes to make you understand, because there will be some guys who would have taken the trade at 9:45, but there would be some guys who were busy in some other task and they are seeing the market after 11:30 or 12 in the afternoon, so they can take an entry here, right? So it varies from person to person. So I explained the complete day for this particular chart so that you understand the logic behind using the POC lines, okay, or the volume profile as a whole. Okay, so this is basically today Jindal Steel also fell, Escorts also fell, Tech Mahindra also fell. So if I take you to let's say Techem, okay, just for an example, if I take you to Techem, this is the way Techem was. Okay, so you can see today's POC is the last red line. Okay, but as I said, this will be fluctuating throughout the day. Have a look on the POC of the previous days. Okay, so this was yesterday's POC. Once that was breached, it fell. And till where did it fall? To till another POC level. So this POC might be of the day before yesterday's candle. Sorry, day before yesterday's chart. Yeah, it was for 30th chart. Okay, so once this POC line was breached, if you short your position, easily you can target for the next POC, which is the support. Okay, so if I take the example of Escorts, okay, Escorts, see what happened. So this was the POC line for some previous days. Okay, so okay, this is, we don't have any POC lines in between at all. Okay, so but I'm very sure that today's POC line will help you to decide where to take the entry and where to exit. Okay, so basically you have to, let's go to Jindal Steel. Okay, so basically, you have to be on the charts, and after the market gets over, you need to have a look on all these things to understand stuffs. Okay, see how beautifully this POC line from some other day, yesterday. See how beautifully yesterday's POC line is working as a resistance, and when this POC line was breached, it fell. Okay, so the whole, I think, I hope you are getting the gist of what I'm trying to make you understand, guys. Okay, use volume profile, but while using volume profile, you can just use the POC lines to take up your trades. There is no need to use developing POC or developing VA, because that confuses things. Okay, it needs a lot more learnings from your end to go ahead and use them in the live market. Okay, so I hope we have made the things simpler. Just remember one thing, that you need to use the POC lines as the supports and the resistances. Okay, and the POC lines for today is also important. The POC lines from any other day is also important. Okay, the only thing which you need to make sure, that you need to extend the previous day's POC lines towards the right hand side of the chart. Okay, so that you know exactly where exactly is the support or where exactly is the resistance. Okay, so I hope this was helpful, guys, and I should really apologize because I know this video is going to be long, but it was important when you discuss technicals, or especially when you make technicals understand to the guys. It takes a lot of time because you need to cover each and every aspect of the technicals so that people understand exactly how to use them. Okay, so please do forgive me if this particular video is a bit longer. Okay, and lastly, the question still remains, can we use this as a complete strategy? Well, I would say it would be better if you can combine this with some other technical which works stronger. Okay, the thing about volume profile that we had discussed is very strong. Okay, no doubt about it, and it works superbly as support and resistance. But in day trading, as I always say, multiple confirmations are very much required, okay, to make the trade more stronger and to tilt it to the winning side. Multiple confirmations are always required. Okay, so bring in some more texts that actually work. Okay, and I'm sure it will work wonders for you. Okay, spend time on the charts, guys. That is how you can learn, and that is how you can earn money. Okay, so that's it, guys, and as always, would request you to like and subscribe to my YouTube channel, and also please do not miss the ending of this video, as you might get to know more about HYIT that might be helpful to you in some way or the other. And please feel free to ask your questions or queries, if any, in the comments section, and I will surely answer back to them. And also, please do not forget to like this video if you liked it. So that's all from my end, and I will see you all later. Hope you all will stick back. Happy trading. Stay home. Bye bye.